Amani is the director of EMEA 2 research from Institutional Investor, our dear partner, with whom together we already collaborated last year when reviewing what institutional investors know and believe on how Romanian companies communicate. And hello, Amani.
Hello, Daniela. Thank you very much for your kind introduction, and good afternoon to everybody. I realize that this is the graveyard shift, so this is the final slot before you can all go back to non-online activities, I guess, which I'm sure is a positive thing. Thank you for putting this event together. I know it's a lot of work for ARIR and Daniela and Daniela Adelescu. So congratulations on pulling this off in a virtual space. So in terms of introduction, I'm the director of research for EMEA and Europe for Institutional Investor. We are part of Euromoney Institutional Investor PLC, which is a London Stock Exchange listed FTSE 250 company. And I guess we're most known for our financial publication, our insightful editorial, the insights and information and analytics and analysis that we're providing to the wider capital market players, but also, and more importantly, I think for this webinar, we're an industry benchmark for global independent validation, performance assessment for all the three players that you're engaging with, your corporates, your buy-siders, and your sell-siders. And we produce annual rankings and analysis that enables corporates specifically, because you're on the call, to benchmark your IR activities and engagements and to really assess the effectiveness of how you're engaging with your stakeholder universe.
Amani, how has shifted the investor perception in the past months already, and what was the key to success to win investors' hearts in these challenging times?
Yes, indeed, it is a challenging time, and I hope all the listeners today are all well and their loved ones as well. I need to say that because it's still very important and acute. I think when we think about investor perception, we need to understand really what are the biggest concerns for investors and what are their priorities. So what are the things that really keep them up awake at night? And we've recently started a survey or a research project under II, Institutional Investor Spotlight, whereby we're actually engaging with both the buy side and corporates to really ascertain and identify what are the responses, what are the key concerns, how do they perceive the market, what are the reactions to the different dynamics and changes that are happening. And in terms of the interim results, what we can already see and ascertain is that the biggest concern really on a wider scale is the wider economy, how the economy is actually shaping up, how government measures to actually tackle the pandemic, as they've left actually quite a lot of sectors unable to fully function and operate, and to think that some of those companies are producing very little or no revenue at all. So with that in mind, the wider context of the economy is of great concern, and what the recovery looks like. Is it a U, is it a W kind of recovery curve or line, and specifically also what the impact or the impact of the crisis on consumer demand and consumption. On a more micro level, I think more relevant as well from an IR standpoint is really for the engagement of corporates. The top three priorities is really the health of the balance sheet. I think that's something that over 70% have actually said is key. Then obviously the cash burn rate, so how you're conserving cash, how you're managing your cash, and also as a third element is how proactive management is. And that doesn't necessarily mean access to management or visibility, because I think investors are very reasonable when they come to engage with corporates. They fully understand that CEOs and CFOs need to run business, run their businesses. So it's also understood by investors that they are currently making decisions in a very tough and very unpredictable environment. They don't have a crystal ball. They cannot see the future. they don't really know what will happen in the future, longer term. And that's why I think they're less concerned with quarterly results in that sense, because they're less indicative as to where the long-term trajectory of companies are. So, and it's interesting because investors believe, and I think that's very, very true, and I hope you as IROs have come across that kind of sentiment. They believe that, those companies that make the right moves right now, profits and dividends will actually come later. So they're not too concerned about short-term fixes, but really how you as companies are demonstrating business resilience, and how you are trying and organizing yourself to create long-term growth and value creation. So there will be there will be a great level of scrutiny, and they will be watching companies and their communication very carefully. And with that, I want to focus on really 3 elements that investors are, assessing and looking at when they're making their decisions as to certain investment opportunities, or how they're, seeing and perceiving certain companies. The first one is really an obvious one, but it's something that has actually really, strengthened its position or its meaningfulness over the last few weeks. And that's really how companies are looking after their stakeholders, not only their shareholders, but their stakeholders. So employees, customers, strategic partners, and suppliers. And actually in the UK, one of the bigger UK asset managers has recently warned companies that if you don't look after your staff, if you don't look after your employees and your suppliers, you will actually be held accountable. And that's quite important. So the virus outbreak is actually in many ways a very big test for business, almost like a stress test for businesses, how they're facing actually the idea of stakeholder capitalism. And even though companies, don't have an easy or straightforward or silver bullet kind of answer to navigate all the requirements of employees and customers and investors and their community and society at large, I think it's important to realize that every action will be different depending on the sector, depending on the government mandated shutdowns, the workforce flexibility, product changes and demand that is changing. So all of these different ranges of factors will dictate how companies can actually respond. But with that, actually, thinking of those kind of issues or those elements, we know that from before COVID, that ESG has been quite an important part of the engagement narrative and the strategy of IR, and how they've communicated with investors and what investors are using now to filter and screen companies. And what has happened actually is a real shift from what previously has been a focus on environmental and governance related issues on actually the social aspect of ESG. And there has actually been a recent study or report produced by Morgan Stanley where they're pointing out specifically that human capital management, so the corporate culture, the treatment of customers, all of this are really key factors as part of an ESG strategy. And with that in mind, they actually want companies and management to treat health and safety of their employees, of their customers, of their suppliers as really the first priority. And why is that actually so important? Because fundamentally, when you're treating your stakeholders during a crisis, you're treating them well. It's telling investors in the outside market a lot about the brand value and the culture of the company, and that in effect defines your company's reputation, and not only now but really for the future. We've seen quite a few companies, specifically there are a couple of cases here in the UK where companies have actually had a very short-sighted view on their business, really focused on quarterly results and earnings. And that has actually backfired because they considered, they saw themselves as essential businesses when they weren't. They didn't pull out their staff quick enough or early enough, didn't shut down early enough. And that is obviously putting their staff and the health of their staff at risk. So they've, had, obviously in terms of reputational damage, it is quite a significant element, and as a result, bad press. But it is important to protect and keeping staff healthy and safe, because it's not only the right thing and the humane thing and compassionate thing to do, but it's also really smart. Because through ensuring that you have an operational and functional workforce, you can make sure that you have people who are involved and lead on R&D initiatives. They can go out, identify potential new business opportunities, accelerate any kind of new product launches, all of these elements that really help strengthen the company's competitiveness and make sure that companies actually stand out during this crisis and can demonstrate their business resilience. And at the same time, there are enough companies, and we may actually touch upon that later, Daniela, enough companies that have actually demonstrated also a great level of goodwill towards their community. Those companies, that stepped up and provided or donated medical supplies, that produced masks in their manufacturing facilities. All of these things, and specifically when it comes to supplier engagement, you can look at supporting finances of partners in your supply chain, maybe accepting delayed payments. All of these things, are really helping not only to raise your brand, but also to do good things that make you as a stock a lot more investable from a investor point of view. So how companies, manage and are looking after not only their shareholders, but their stakeholders is really important. And investors actually regard companies that take those stakeholder views and needs and requirements into account more likely to be really good long-term investments. And this whole aspect of the S in the ESG is not going to go away. I think it's going to intensify. It's going to create a much bigger scrutiny, even though the data I think is difficult to compare and to measure. But there will be greater levels of scrutiny in terms of labor laws, in terms of equalities. Has your company got health plans? Is there childcare provision? All of these things will become really quite critical. The second aspect, and what investors are looking at, is actually the agility and how companies are going about, seizing new opportunities that could drive long-term growth. So like Winston Churchill actually once said, never let a good crisis go to waste. So we in our II Spotlight research, we've actually discovered that 60% of corporates are actually actively exploring M&A activity. So companies are really looking at, potentially lower valued assets to acquire them. And McKinsey has actually published some research on specific M&A activity. They call that programmatic M&A activity, which actually, when applied correctly by companies, delivers excess returns and with less volatility in a time of crisis. And they've taken that research from the dot-com crisis and from the financial crisis. So companies who actually, have the agility to adapt to their own kind of situation, to their own unique situation with their, competitive advantage, and identify potential, attractive new opportunities before sort of the next phase of this virus is kicking in. They are likely to emerge strongly out of this issue. They look at their competitive advantage, their USPs, they assess, whether they're financial and operationally actually able and fit to and have the capacity to actually finance those kind of transactions. And more importantly, they also need to get buy-in internally. They need to make sure that, the staff, the individuals, the employees that are working on those projects, know that they have to weather, the kind of headwind and the challenges of the current environment. So, and it's not only actually about, acquiring assets, but it's also providing this current environment, providing an opportunity to actually acquire new talent, specifically when you're looking at new product launches or, M&A activities. You want to make sure you have the right kind of talent in your company. And where companies may be dwindling or they're weaker, you may be in a good opportunity to hire actually really strong employees there to add to your human capital. And the other element of looking at your operational business is also a lot of companies have now employees that are working from home. Everybody is, tapped into a digital office, if you like. So what they're doing now, or should be doing, is actually reassess their real estate portfolio. And potentially the working policy as well for the longer term. So allowing more a flexible working environment that doesn't require anymore as much office space. So that will, fall into immediately to, conserving cash if you can get out of your leases in time. So all of these considerations really impact the long-term growth of companies and their business resilience, throughout this entire crisis. And the last aspect in terms of what investors are looking at is really how you are communicating with them, and it will be different from investor to investor. So every investor will have a different set of criteria that they need fulfilled, or information or data that they need from you. Specifically, when you look at short-term investors, they want to have more regular trading updates, whereas longer term investors, they want to understand more about how you're actually dealing with a crisis. Where are the growth opportunities? Where is the return on capital? How do your employees feel, and how well are they? In line to my earlier point. And companies that are actually facing much greater levels of stress, I think for them it's important that they update the market on their liquidity and their cash positions very, very regularly. We hear that almost on a monthly basis would, if possible, would be really quite advisable. And of course, it goes without saying that, be factual in your communication, be transparent, be honest, be accessible. From our current research that we're producing, the II Spotlight research, we also understand that the top 3 things investors want actually from IR is really real-time updates on the impact of COVID. So every time there's a shift, there's a change, be sure to engage that and communicate that with the market. And to my earlier point, investors do understand that you don't have a crystal ball, but they want your best estimate for 2020. So again, it's through your engagement and your relationships and your calls, where you provide more granularity and insight. And the final of those 3 is actually IR responsiveness. So they want you to be able to respond if there are questions, if there are queries, if there are concerns, be sure to respond to them quick enough, even better anticipate their needs and make sure that they actually don't have any questions. So provide the market with the relevant kind of information. So I'll stop there and pause for a little bit in case there are any questions.
Thank you very much, Amani. It is always very insightful to hear you and your thoughts on how the world investor relation best practices are evolving. Because we are approaching the final remarks of this discussion, please let us know what are the updates in terms of the evaluation by institutional investor of the Romanian companies, and how will be the schedule this year.
Yes, thank you for that. So we have basically conducted our European and Emerging EMEA survey starting on the 2nd of March, and it went to the 1st of May. So we extended because we actually kicked off the research process right in time for when the crisis really hit Europe, and everybody's eyes and thoughts were really elsewhere. So because the buy side and sell side had kindly asked us, please extend, because we want to participate in evaluating corporates, and also the sell side, we decided to extend. So there was no way for us to actually cancel, because we've really at an early stage, we've collected quite a significant amount of feedback and insight, and really the performance assessment on corporates already. So it was a few more weeks than we had originally set out, but the overall results looked really quite positive. We are right now in the process of validating and verifying all of those votes and feedback that we've received. It is a very granular and very odorous kind of process, because we need to make sure that the votes and the voters and the people that are providing feedback are relevant, can provide that feedback, are covering stock, have invested in stock or in peers. So all of these kind of eligibility criteria that we set out from the outset need to be met for those votes and feedback to count. So the official results we will be releasing towards mid or end of July. We haven't defined the exact date yet, but we will communicate that through ARIR and Daniela's efforts timely to your constituents, to make sure that you are aware of that. But the results for Romania will obviously be released when we have our awards, whether this will be physical, and I'm sure you will be able to share more information on that, or whether it will be a virtual event. But the feedback that we can see so far in the interim results, it's very comparable to last year in terms of Romanian participation. We've had even a few more newcomers, actually, new corporates that were assessed. So it's not the usual suspects that we expect. So there is some verification or variety there as well, which should make it more interesting. So overall, we're very pleased, and we look forward to actually, recognizing your hard work and providing you with more insights on where you can actually optimize your investor relations outreach to be a lot more effective, and to make sure that you're engaging your investor community, existing but also prospective, with the right kind of strategy and plan in your back pocket.
Yeah, definitely. We are very eager to learn who did well this year, especially given the pandemic, as this was this was a different situation, and
Absolutely.
it was new, totally new in terms of reacting and communicating with investors. And we at ARIR have engaged into proactive communication and have gathered key stakeholders and have promoted online events and discussion, including the one today. Amani, our time expired, and we are very grateful to have you as part of our second edition of the ARIR Forum, and hopefully we will continue and we'll see each other maybe in the second part of this year in Romania.
Yes, hopefully. Thank you very much for your time, and everybody stay safe and healthy. Many thanks.